All right. Ready? Awesome. Welcome, everybody. My name is Jordan, and here with me today is Pav Hundal, lead market analyst at Swyftx, Australia's most trusted crypto exchange. Pav, welcome to Dear Crypto. Thank you so much for being here.
It's good to be here, Jordan, after our little escapades trying to set this up.
Yeah, I know. Worth it though. It's worth it.
Yeah,
I don't think
absolutely.
my listeners wouldn't be used to this quality of sound, so I appreciate the headphones and the mic set up, Len. So we need to talk about the crypto news cycle commotion because we're seeing the
We do.
traditional finance world collide with the crypto world in big ways. Most recently, we had BlackRock, just checking the recording. Most recently, we had BlackRock, WisdomTree, and Invesco file for Bitcoin ETFs, and some of the biggest names in finance, including Citadel, Charles Schwab, and Fidelity, launched EDX Markets, a crypto exchange of sorts for institutional investors, for the big players in the finance world. And then to top all of that off, HSBC, the largest bank in Hong Kong, is now offering Bitcoin to customers. So something's in the water. I don't think that we've ever seen so many big players in the traditional finance space take such an obvious interest in crypto, aside from maybe a few very key people who've moved out of traditional finance altogether and into crypto. But where we could see some big money flow into the crypto space. And I would love to know your take on this and what you think about the market response to all of this news.
Yeah, I think it's been interesting. There's two ways that I've been sort of seeing it play out. I mean, personally, I have had we've welcomed in our third child, so I have been a little bit off the crypto space as I normally would be. But
Congratulations.
no, thank you. But yeah, the sleepless nights mean that I am sort of trying to quickly catch up with what's been happening.
Love it.
But there's been a fair bit to talk about, I think, in that regard. Like a lot of people are still firstly, they're super bearish on crypto. I think everyone's just so cynical. Any rally, everyone's sort of dismissing it as almost like a disbelief rally. So like the way that we would characterize that and see that is if you look at derivative exchanges, you can see the way that longs are paired against shorts. And we've seen a higher concentration of shorts, especially when key levels are getting hit. And what you're seeing is like, every time you see prices absolutely jump and hop and skip, it's because of a whole bunch of people. One of the main reasons is a whole bunch of stocks just being liquidated and just stop hunting straight through. So short squeezing, as we call it. So
Mm.
we're seeing a lot of that compared to what we have in the past 3 to 6 months.
And so
And
sorry, those shorts assume that, crypto is going to bounce back down again after
correct,
this
correct.
rally in the market. Yeah.
Yeah, exactly. So if you think about any time the marketplace comes to a decision point, there's a bunch of people that put their money on heads or tails, and it's just charging through and going higher. So what that's sort of telling is that, although everyone's been talking about coming out of this crypto winter for quite a while, a lot of people have still remained somewhat positive or somewhat bearish. And right now, I guess there's still quite a fair few people still bearish, even though we have had arguably probably the most bullish news we've had in a long time. At least during this cycle, at least in the bear market. I
Yeah.
mean, just to like highlight that with something like an ETF, you're enabling traditional money to finally enter the crypto space. And some people might say, well, hasn't there been an ETF in the past? Well, there has been, and it's been mainly a trust that was built around an ETF of companies that have exposure to Bitcoin on their books. So it wasn't direct Bitcoin exposure, it was exposure to the stocks of companies that had Bitcoin on their books. So what this actually does is create liquidity. BlackRock's instance, they're going to be using Coinbase for custody. Is creating liquidity to move the market, and the market can't move without liquidity. So
Mm.
that's the biggest thing. And I think I guess look, we were joking before the show as well. Do they just know something that we don't know? I mean, that's just something we can just keep speculating on. And it is funny to see all of these funds come through at the same time. And there's obviously, I personally believe there's a lot in the background that we're not hearing about, and other people filing for other products in the ETF world. I think I saw even today a product be approved for a derivative ETF based upon the current CME or CBOT Bitcoin futures product that currently exists. So, look, I just think it's huge. It's huge adoption. There's a
Yeah.
lot of people that may not want to, take the punt on a crypto exchange, but they're happy to do it through something like, their comebacks and their Macquaries and their NAB trades. I guess that's here in
Yeah.
Australia. But the same exists in the US as well. So a lot of people sort of would potentially rather trade through entities that they know than have to take risks with third parties.
Absolutely. Yeah. So, I mean, I'd love to know your take on the pros and cons of a spot Bitcoin ETF. And, just for context, guys, I know the last time that we met on the Dear Crypto channel, we spoke a lot about the BlackRock ETF, but they did in fact submit a 102-page filing to the SEC to establish a spot Bitcoin ETF. There's been, like Pav said, at least 30 knockbacks from the SEC from other funds trying to do the same thing. And the SEC, I suppose, has their reasons as to why they've done that. But BlackRock is the biggest asset fund manager in the world. They've got $9 trillion plus under management. That equates to, just for comparison, it equates to about 40% of total US GDP. So they're a huge player. And interestingly, their CEO had previously called Bitcoin an index of money laundering in 2017. Obviously, he has softened up his views substantially to get to the point that we are currently at now. But what do you make of, I suppose once we jump into the pros and cons of a spot Bitcoin ETF, what do you make of the timing of this decision by BlackRock? Because like you said, they're holding, they're relying on Coinbase to hold, the crypto assets for them on behalf of, their clients. But Coinbase is currently in a legal battle with the SEC for, operating as an unregistered license. The SEC is really trying to bring the crypto industry to its knees. And now all of a sudden, we've just seen this absolute surge of interest from traditional finance in crypto. What do you make of that?
It's a lot of noise, right? Like, it's hard to make sense of it, and I don't think the average person, or even the person that's, I don't think there's a single person out there that knows which direction this is going, I guess is what I'm trying to say. So whenever I sort of have in the past in news like this that's conflicting, it's usually just the best and safest thing to do is, if you're unsure, just wait and see what happens. I mean, there's two sides that this goes. They obviously settle, mediate to some degree, and whatever sanctions get handed down, it may help form whatever regulation might be coming that way in the States specifically. Or second to that, Coinbase is going on the front foot of saying that they've been very transparent with the SEC. They have it well documented. They have it in writing that they're looking for clarity, and they couldn't get clarity. When they couldn't get clarity, they came to some sort of middle ground. So whether or not this is just one of those cases of the SEC is making noise and it's just going to get thrown out the window, that's not even to start and talk about the potential breakdown of who's currently running the SEC as well. There's a lot of chatter there about Gary Gensler, the current chairman, to be stood down. So, I mean, it's tough, right? Like, it's a heck of a lot of noise. I think that's why most people right now are so confused potentially as well as to what's happening. And historically, if you ever looked at, I guess, the sort of news events that sort of materialize around certain points in Bitcoin's or even crypto's life cycle as an industry, you'll quite regularly find things like Tether FUD, what used to be China and India FUD, all happen at probably the best buying opportunities that we've seen historically. Not to say that's what's happening right now, but we have seen, I guess, a growing replacement of, well, I mean, you said it, right? Like, Hong Kong is now providing avenues for people to get into crypto. So they're not even banning it anymore. It's the US and the SEC that's almost the new FUD from I guess, that regulatory point of view. So time will tell. But I mean, if we're going off anything historically, I mean, and the fact that some of the, again, like you just said, the company that is the biggest wealth management group in the country, in the world, really. I mean, even in Australia, people will see iShares. They're all BlackRock products. They're getting their hands involved. They're not doing that because someone dared them to. There's obviously an opportunity there to make money. There's an opportunity to be, I don't know if there'll necessarily be a first mover. I've heard that there's other people that have filed for successful. They've successfully applied for ETFs ahead of BlackRock. So it'd be interesting.
Yeah, absolutely. And I mean, I think what we're seeing right now is the rest of the world is really cracking on with crypto regulation, fair crypto regulation, trying to figure out how to welcome this, this new wave of digital asset innovation. Europe's making leaps and strides ahead, and Hong Kong is entering. Singapore is a big example. I know in Australia we're undertaking the world's first token mapping exercise. So it's almost like all of these other countries around the world are trying to figure out how to contend with digital assets, I think it's very obvious that digital assets aren't going anywhere. So how can we create a new structure that allows for fair treatment of digital assets? But, in the US, you have TradFi, I suppose, coming up now against the SEC, a body that was established way back in 1940 that created this regulatory framework that there was no internet, there was no cryptocurrency to contend with. And, it would seem like it's in the SEC's best interest to innovate in line with cryptocurrency like other countries are doing. And now these big sort of TradFi players are going, well, look at the rest of the world is going to get far. They might beat us out in terms of competition because, the countries that they exist in and the jurisdictions that they exist in allow them to capitalize on this market opportunity. And we're stuck back here. And I suppose that an institution like BlackRock would absolutely not want to get left behind. And I thought it was interesting. Jeff Bang, the co-founder of SCI Labs, he's also a former Goldman Sachs analyst, told Forbes, as the world's largest asset manager, BlackRock sees an opportunity to maintain its position in global capital markets through its ETF application. And if they succeed, it signals a strong sense of trust in their leadership by the SEC to navigate crypto alongside regulators while also legitimizing Bitcoin, which is, it's an interesting comment. Obviously, Bitcoin is legitimized in the eyes of many people around the world already, but it's a different thing to be legitimized in the eyes of one of the world's biggest fund managers. So what are some of the pros and cons of a spot Bitcoin ETF, and what type of impact might that have on the markets?
I think some of the let's go through some of the cons. So Bitcoin was born basically out of the idea that Satoshi be who they are, that the current system doesn't work and it's always inevitable to fail. So it's the idea that you can't trust anyone with your money, because at the end of the day, the government can shut your bank account, they can take your money, they can freeze your assets. And we saw in Canada when the truckers had their stance, I don't know if you remember that, they had their protest that time. Just to quickly round out what happened there, the Canadian authorities basically shut down the accounts of anyone who donated to that cause, people that were basically associated with that, silencing essentially their political right to protest. So that's currently, I guess, some of the cons that you go and get the social construct of why this digital decentralized form of currency works or exists, I should say. I think a pro, I guess, it's going to increase adoption. I think as much as this may not be on the front of everyone's mind, it's going to reduce things like money laundering. Hearing about in our Aussie landscape, a lot of banks changing their rules, certain players being outbid from being banked. That's all got to do with money laundering and counter terrorism and financing and things like that. So yeah, that's been identified as a risk for adoption. So I think that's a pro in the short term, just to get it over the line. But yeah, I think the one thing that can't be understated is the overall con is again, you just have to be trusting a third party with your assets, which people may or may not be happy to do.
And obviously, like you said, Bitcoin was created really to democratize the distribution of money and all around the world. And these big institutional investors that have so much, are able to throw around so much weight in the financial markets, and that's historically ended with some of the most catastrophic financial crises that we've seen in history. And finally we have this currency in Bitcoin that can exist independently of any sort of fiat currency. But I guess that's just the reality of living in a mostly capitalist sort of financial and free financial market. But it's still, for me at that point, it still feels early enough where you can be involved in Bitcoin before that really starts to, before that institutional adoption and that domination really starts to take effect. So I almost feel, in terms of possibly a pro, just personally sort of existing in this space now before all of that blows up. And, we spoke about, even before this call, we spoke about how people are pulling up price charts of when gold launched on the stock exchange back in the early 2000s. and the impact that that had on gold's price. And if that had such a big impact on gold's price, and gold is often, and Bitcoin is often said to be the digital equivalent of gold, people are now like, wow, maybe we could see this big run up in Bitcoin, although that's to be,
to be confirmed.
Yeah.
I think the one thing that I would sort of speculate, if I had to, is that having this more mature market coming to something like cryptocurrency. I mean, we've seen it depending how long you've been in the space, but over time the volatility actually decreases. As much as it seems like it's quite hectic and heavy right now, it's actually a lot better than what it used to be. But I would see that again, like the ROI potential, but also the risk is going to decrease. And, you may not see these 80 to 200% swings on Bitcoin in the future. Maybe you just get 20% before it retraces back down, 20% again. Like it probably will normalize and create, I guess, a little bit of stability for the industry in that way. But I mean, you could argue that's why people are attracted to the space. It's the way that, the younger generations have a way to, I guess, catapult their portfolios when risk is sort of placed in a good manner. But then that's also
No, go ahead. Sorry.
I was just going to say, but that could also protect the average person buying the top as well and having 80% of their money lost as well. So it goes both ways. Yeah,
absolutely. It's an interesting point that you make about younger versus, or, adoption from younger generations versus older generations. And, a lot of people, obviously younger generations have cottoned on to crypto arguably much quicker than older generations. But again, I think that those older generations have been around in the market for so long. They have seen so much. And so, part of me thinks that comments that, that Bitcoin is money laundering and all that sort of thing, well, they're not untrue, really. That they are, Bitcoin has historically been used for money laundering, and perhaps it just had to go through that growing pain to get to where we are now as this, more recognized and established digital currency. So, look at those comments from CEOs of big financial institutions, and we're all allowed to change our tune. Michael Saylor did it,
So he did indeed.
Yeah, that's it. I really am keen to talk about EDX Exchange. I don't think it's received near enough coverage in the news cycle as what I thought it would, but I absolutely think it has contributed to this big run up in Bitcoin's price action in the last week. I think we've seen a 15% increase in Bitcoin's price, which is pretty crazy considering we are meant to be in a bear market. But for context, we had some big traditional financial institutions like Charles Schwab, Fidelity Digital Assets, Sequoia Capital, and some other large firms get together and launch EDX Markets. It's a non-custodial crypto exchange, or it's been described as a non-custodial centralized exchange. High liquidity, competitive quotes, and a non-custodial model that aims to reduce conflicts of interest. Pav, can you please translate that into plain English for us all? What does this mean?
So it's looking to, I guess, we're speaking, I think the best way to explain it is like we spoke about it with the ETF. Like the one thing it'll do, it'll remove this issue of custody. Like a lot of people just don't want to get into crypto because they don't know how to store it themselves. They don't want to trust it with a third party. And when we look at something like an ETF, like that's the way to get around that. You're still technically having to trust a third party in that case. But for some people, that's less daunting, right? There's less chance of getting hacked because you can't withdraw an ETF to anywhere. So something like a non-custodial centralized exchange, that is a mouthful of basically saying somewhat of a similar sort of setup where the exchange itself won't take custody of your assets. So whether that's held again at a player like Coinbase, like they hold a custody solution where basically the funds are stored, but what they use is like a clearance, I guess, model, which the best way I can sort of describe that is like it's nothing new, like it's in the traditional finance world. But if you just think about a whole bunch of people with deep pockets, even not so deep pockets, like this is an exchange. I don't think there's any restrictions on it. It's open now, so you can actually go check them out.
Just for institutional investors. Okay. Yeah, it's not for retail investors.
So what it allows for is those guys to basically trade once the markets are opened, and at a certain time they'll clear those things. So if you think about it, if you've ever worked in retail, settling the tills, essentially everything just gets settled and all the money just gets moved to where it needs to be moved, and any assets are probably stored off into custody. So I haven't read into it particularly, but that's essentially what they'll be looking to do there. So that's something that doesn't exist currently in the crypto space, and seems like a bit of a no-brainer if you knew how to go about it, just to, I guess, help build trust for those larger players. But I mean, from memory, I think they've only got a couple of assets. Is that right?
Yeah, they do. They've only got, I believe it's 4 assets. Bitcoin. I don't think they had Ethereum. Bitcoin Cash, and Litecoin. I mean, Bitcoin Cash and Litecoin, I don't know. Like, are they on anyone's radar at the moment? Like, I understand Bitcoin, but I think their approach with this has been to avoid listing any cryptocurrency asset that could be considered a security by the SEC. But then but then that totally rules at EDX Exchange out of listing cryptocurrencies that actually, you know, are valuable, at least in the eyes of the crypto community. So interesting choice, interesting selection there.
Yeah, I think it's like anything, it's likely they'd be one, but at the same time, like you mentioned, if they are purely just institutional players, I'm sure there'd be some caveats that they need assets with a certain amount of liquidity, a certain amount of depth, because they're moving quite large amount, I'm going to assume. But it's interesting, right? Like, it is, like you said, not too many people really talking about that one. And that's what I like. I like to find news that no one's talking about. Good.
I know, because it kind of just flies under the radar. It's like when, you know, a lot of the submarine catastrophe, you know, dominated so much of the news, but then in the background, there's all these other, you know, bombs going off, and, you know, so yeah, not great. But the CEO, Jamil Nazarali of EDX Exchange, said, "We are committed to bringing the best of traditional finance to cryptocurrency markets with an infrastructure built by market experts to embed key institutional best practices." That just sounds like a big mouthful of nothingness to me. But, you know, if we're just kind of translating that into plain English, it's helping bring institutional investors into the crypto space to take advantage of the opportunity, you know, of market fluctuations, of price, of, you know, making more money, with the endorsement of our new and growing list of investors and customers. We're proud to launch trading and look forward. It'll be very interesting to see how EDX Exchange goes, and if they're going to apply any pressure to the SEC to put some more regulation around the definition of a security, and possibly open that definition up so they can add more than just Litecoin and Bitcoin Cash to their list of tradable assets. So, have you observed anything? What's crypto Twitter saying? What are people saying about this news?
Not too much, other than the few people that I've seen talking about it are, again, just looking at the BlackRock, you know, is that a reason why the markets are holding up of most recent time? Like, anytime they're selling pressure, are they the reason why it's going up? I think you could speculate that till the cows come home, unfortunately. But yeah, it'll be an interesting one. I think that we've just started to see the impacts of. I think the next step, I think, obviously, is to see what's the adoption rate of their products, like what's been the flows, what's been the amount of people coming into the space. Like, if that information is ever available, I guess that's how we'll, you know, it's only through, I guess, retrospect that we'll be able to understand how big a deal this really is.
Yeah, but how fun is it to talk about it in the moment?
Heaps. It's better than talking about an exchange crashing. So.
Yeah, that's exactly right. You know, oh, what's going to happen? You know, it's funny. I think, at least for me, when I look at Twitter, when a news story breaks, I immediately go straight to Twitter, because the viewpoints can be so extreme. I mean, you've got people on one end of the argument saying, you know, this is good for adoption, this is good for the community, this is good for, you know, our wallets. From a purely financial perspective, this is a good thing. Why else are you in crypto? But then you have this, you know, very principled and moral side of cryptocurrency, who just believe that institutional involvement ruins the essence of cryptocurrency. Even one person I found had commented that the SEC drowned the crypto native exchanges in lawsuits, which is exactly what the SEC is doing, generate fear around them, at least in the eyes of the public, and then let the traditional finance vultures swoop in. So, you know, there's a lot of chatter, and, you know, people like to put the conspiracy hat on to speculate about, you know, how all of this has really panned out and worked. But I know that even before jumping on this call, we were talking about the fact that you know, it doesn't just an institution like BlackRock with some 20,000 employees can't just, you know, decide something like this overnight and then perfectly plan the timing. They would have, this decision for them would have been in the works for quite a long time. I believe someone in that industry said at least for 18 months. So it's just so happened that, you know, this is the time when, you know, when they've decided to launch everything. Plus, Jerome Powell interestingly commented, he's the Federal Reserve Chairman, said yesterday that Bitcoin crypto appears to have some staying power, which, you know, it's funny. Yeah, exactly. I think we've all thought that all along because we understand the asset, we value it, you know, but finally it's sort of, there is something validating about it being recognized as something more than just a Ponzi or a scam by, you know, those bigger institutional players. So do you have anything else you'd like to add on the whole EDX Exchange, BlackRock news?
Not particularly, other than just keen to see what else comes out of the woodwork right now. I would be surprised if there wasn't more to sort of come out in the next couple of weeks.
Yeah, absolutely. Well, thank you so much for joining the Dear Crypto crowd today. Guys, the next few months are going, I'm running out of time. All right, I'll make this quick then. Guys, the next few months are going to be very interesting for us crypto investors indeed. My name is Jordan. Dear Crypto is our brand. We're all here to understand what really happens in the Web3 space. You guys are what makes our community the most inclusive place to explore Web3. So go ahead and hit the like button and subscribe to be part of Dear Crypto and support the channel. And we will see you next time. Bye, guys.